What's up, guys? This is Tom, the Action Accountant, and today in the No Stupid Questions series, we're going to talk about what is an option contract. Let's dive in, shall we?
This video is for entertainment and informational purposes only. It does not constitute investment advice or advice on tax or legal matters. The Action Accountant is a certified public accountant in the state of Washington.
An option contract, as we've been kind of hearing in the Robinhood news of the last year, is a way to quickly trade price movements on a stock and make or lose an awful lot of money very fast. So they're very exciting. They're also kind of wild and extremely dangerous if you have no idea what you're doing. But for now, let's break down what an actual contract is. An options contract is an agreement between two parties on an underlying asset. And that part's important because you can literally trade contracts on almost anything. It can be cryptocurrency. We're talking about stocks. It can be commodities. We can be talking about bushels of hay or corn or pigs. There's funny stories of people that were trading sheep options and they were exercised, and someone, a truck showed up with like 1,000 sheep to someone's apartment in New York City. Like, just crazy stuff. But I mean, you have to understand that you're actually dealing with an underlying asset. That's the most important part, and what makes up an actual options contract. So an actual contract is an agreement to buy or sell between two parties an underlying asset of some sort. Again, we're talking about stocks, but there's lots of things that it could make up. And so what makes up the contract? The four key elements. There's more than four, but the ones that like really matter when you're actually looking is the asset. What are you trading? For today's video, we're going to talk about Palantir and my recent trade with them and kind of what I did and why. The strike price. So as we pull this up, is the price that you're agreeing to trade on. So on our screen right now, we see a strike price of $23, and so there was an agreement to buy or sell an asset at $23. The expiration, which is up here, if you're on the Robinhood, in this case there is a weekly option available. So every Friday, the options come and go. Some stocks are monthly, and some extremely volatile, like highly traded items, like the S&P 500, actually has daily or midweek options as well. But the most common is weekly. And then lastly, and arguably most importantly, is the premium. What you're actually going to pay for the right of this option. And that's basically how you can determine what has to happen in order to make money based on how you want to trade it. Now, again, we're not going to dive into all the various trading strategies, the iron condors and the straddles and the strangles and the long calls and the bull puts and I don't know. There's so many. It's ridiculous. And they all have a different purpose. But let's just go ahead and keep going on to what we're looking at. So I personally trade what's called the wheel, and what that means is I'm making money on this premium, and in particular the time decay on it. So if you've taken a basic finance class or an accounting class, you've had to do the time value of money, and basically as the share or as the contract gets closer to expiration, so in this case tomorrow, the value of the contract gets significantly less. So let's push this out a week. The 23s for today are trading for 50 cents. If you push it out a full week, it's going up to 90 cents. If you push it out a full month, they're going to be looking at almost $2, right? So we're witnessing that decay decrease substantially. Now let's just go back and stay looking at the same apples to apples here. All right, so to keep going here, a put is the right to sell the underlying asset. So someone would buy a put and say, hey, if on April 23rd the price of Palantir or the underlying is under the strike price of $23, I'm going to sell it to you for $23 no matter what it is. Right? If it drops all the way to $20 tomorrow, I still get to sell it to you for 23. So it's a form of insurance for people that are holding stock. I personally am on the other side of that. I'm the maker of that. So I'm selling the put. So I'm looking at a company like Palantir and saying, hey, and there's a lot that goes into this, but hey, I want to buy it for $22.50, whatever, or 23. I want to buy it for 23. I'm going to sell you that same right to sell it to me at 23 because I like it at 23. I'm not going to buy my shares right now at 23.24. I'm going to wait and buy it from you tomorrow, hopefully at 23 if it drops a little bit. And if it doesn't, this option will expire worthless, and I will keep the 25 cents that you paid me for that option to sell it, for that right to sell it. Cool. The other side is a call, and you're going to see a little -2 because I'm actually in this trade right now. And basically, I have 200 shares of Palantir, and I said, hey guy, I have a basis, and in this case I had a basis at 22.50. I want to sell my shares at 23 and capture a little profit and capture some premium income at the same time. So I sold the right for someone else to buy the shares of Palantir at 23. And I don't remember what I sold it for. It doesn't really matter because that's the point of my strategy. Is I just continually do it every week, and that's it. So at the end of the week on Friday, April 23rd, my shares more than likely, if it closes at 23.01 or above, will get called away, and I will get $23 per share for my Palantir. And in my case, that's a 50% profit plus whatever the premium that I made along the way. And most of the time I'm aiming for a little bit over 1%. So in the course of 2 weeks, I sold a put for 1%. I acquired the shares for $22.50, and the following week I sold a call for 1%, and then I will have sold my shares for $23 for a 50-cent profit. So if I do 23 divided by $22.50, that's 2%. So I made roughly 4% in a week. For me, that's healthy and exactly what I'm trying to do on a regular basis. I hope that is helpful. And basically what I'm hoping to help get you guys out of this is an understanding of what an option is. And if you like this content, please hit subscribe on YouTube. I'd like to credit DJ Spicy Ketchup for the background music as we're playing this out. And if you want to keep learning about options and about trades and what to do as you're trying to learn more and grow in your financial background, please join me on Twitch on Sunday nights at 8 p.m. Pacific, Monday and Thursday mornings at 6:30 in the morning Pacific, where I go over a lot of my trades that I'm making. And I do a ton of market research and look at specific stocks and kind of why I think they're going to move the way they're going to move, and do our best to make money together. Hopefully we'll see you there, and I hope you have a wonderful day. Talk to you soon. Peace out.